Good morning, everybody. It's Wednesday, November 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to them during the show. Overnight markets here, December corn down 3.5 at 415. January soybeans were down 15.5 at 986 and a quarter. And December Chicago wheat was down 7.25 at 565 and a quarter. Well, I guess the big news overnight, guys, Donald J. Trump will be elected the 47th president of the United States. Interesting to watch markets overnight. I mean, we've got the Dow's up 1,200, S&Ps are up 122. Bitcoin up 4,600 and gold down almost 100 here. So markets are whips on. I think there's a lot of questions still here this morning about how this is going to relate to grains. So Justin, maybe a few thoughts on your mind as we start the day, and then we'll throw it around the room.
Well, yeah. I mean, obviously the outside markets are moving dramatically. Interest rates have skyrocketed. The dollar's up 1,800 points. You talked about the stock market and everything. So yeah, I mean, we talked about this. I mean, there's been a lot of money on the sidelines, I think, waiting to get to this point. So we'll see what happens. The initial reactions, I don't think are, maybe they're more exaggerated than some people thought, but probably in the same direction that we were talking. That being said, I'd be curious to see how grains close today. I think, you're kind of near contract lows here in like new crop soybeans, for example. The initial reaction of, a Trump victory, bad for ags. I'm not so sure on that. So I'd be really curious to see what happens here. Look back, and obviously it's kind of like report days, right? You have these giant moves, and, a lot of times they could put a high or a low in. So we'll see. A lot to be kind of sorted out over the next couple of days with, there's gonna be a lot of change either way. I think with the power that the Republicans have now in probably all three branches, we'll see what happens. You've got some pretty dramatic people on this crew between Elon Musk and Kennedy and Paul. I mean, a lot of different things could happen here with that kind of control.
No doubt. It's going to be very interesting because, it's going to be a referendum. I mean, they've got the ability right now on paper to get done what they want to get done. And so any change in rhetoric is going to be interesting. Dustin, a couple of thoughts. You were talking about treasuries and things of that nature here this morning. Maybe a few thoughts there.
Yeah, like the dollar, rising nearly 2%. You're also seeing, interest rates rise. So 10-year rate is inching up towards 4.5%. Interesting that we're seeing the real, though. The Brazilian real fell against the rising dollar last night, and now it's back up near unchanged on the day. So maybe it's seen as kind of a favorable thing for emerging markets in general. But like the euro is just getting blasted against the dollar at the moment. And that's got things like gold down. It's got, grains initially down. We've already had, a couple calls like, should we be selling corn here on this news? So I think the knee-jerk reaction is, is Trump going to be negative for commodities because it's going to lead to an entry into the trade war with China? We wrote about this a lot last night, and we talked about it yesterday. It could also go the other way, right? China might be pragmatic and might actually start buying, in anticipation of trying to avoid tariff increases. So the story's not out yet on how this is going to hit the market. And I would just be cautious not to have too strong of an opinion, on a knee-jerk opinion from the first Trump victory, which I thought should have been a little bit more priced into the market than it was, but apparently not. I mean, dollar index up 2% is quite a bit in one night.
The first victory too, going back to 2016, is the market kind of shrugged off the bearishness, right? There was no tariffs. There was no trade war. Even when he announced the tariffs that were going to happen, the market shrugged it off. I think soybeans made like contract highs like shortly afterwards, and then it completely fell apart. But remember that a lot of these tariffs, these things have been in place since he left. It's not like, Biden came in and removed these things. They've actually increased since Trump left. So we'll see. I don't know how much, more. I mean, I think the bigger problem with ags has just been the constant increase in production in South America. So we talked about this the other day, is if you start, which we, by all accounts, look like we're under cost of production there too. So, we're pretty cheap by a lot of different metrics that you look at. Now the dollar, going 2% higher, continuing, that's definitely a headwind, but it's not like we're at $8 corn and, $16 beans. We're at multi-year lows. So, what does that mean?
Ben, what's on your mind this morning?
I like the general tone here that you have to be really careful about how easily you try to connect dots to lower grain prices. I get it. People are going to go back to what happened to soybeans. You remember those things that hurt you in this business. That being said, we had a huge outbreak of ASF when that happened as well, which led to that. So I think you got to take it with a little bit of a grain of salt this morning. Really more interested now in how things shake out today. We start the Goldman roll for corn and wheat tomorrow. Typically, you'll see pressure on the front end, which has been lacking in corn, and they'll sell their December contracts, buy their March contracts. So I think how the market digests that should be a pretty good barometer. And then looking to see, there's been chatter that a lot of this demand has been front loaded out of fear of a Trump victory, and that was the mindset that we got to get this done before it's going to cost us an extra whatever, but the tariffs are in place. So I'd like to see follow on demand. Is there a crunch here where all of a sudden people get more panicky and come buy more? Or have we done what we needed to do? And for me, the market, those are the things that I think are worth keeping a close eye on over the next, 2 to 5 days. And how does corn digest that? I still don't think corn gets below 4 or above 430 anytime until options go off. And then we have to deal with first notice day and find out how big that position is in basis contracts.
Justin, would you argue the overnight that corn, acted okay relative to, the soybean trade, because it was pretty quiet in corn.
Yeah, I mean, it kind of makes sense, right? Like soybeans are the ones that got hit last time. It's obviously a bigger market to China.
Yeah.
So makes sense. And, in South America, weather's been pretty good. So beans have been acting kind of sluggish anyway. But like I said before, let's see, it feels it's being forced down because of the, I think the whole trade outside markets. Obviously there's money that was sitting on the sidelines. I mean, to see the Dow up, 1,300 points, it was well advertised. Warren Buffett got out of a lot of stocks. He's sitting on record amount of cash. I think our markets, we obviously liquidated a big corn short. Now we're basically flat, or the funds are flat. But here we are, we're down, and the spreads, the spreads are higher, so the front end is being kind of reluctantly drugged down. It feels like the major selling's been in the forward, the forward months, like new crop corn and soybeans. So I don't know. Like I wouldn't be surprised if we close higher. I guess I said that before the show. We'll see what happens here, but I just don't think it's a huge bearish argument at these levels right now.
Right. And I think this was so interesting, though, is like he's made it his number one priority is starting to hold China to task on what we already have a framework for, phase one trade deal. So, we're at 10.5% stocks to use ratio ex China right now. That's
a corn.
Yeah, right. Yeah, I'm talking corn now.
Yep.
Yeah, and they're holding on to half the world's wheat supply. Global soybean supply is adequate, but we're going to go from maybe not having China in for much U.S. corn at all to all of a sudden running maybe pipeline carryout again if they try to adhere to a phase one trade deal. And the initial reaction is, oh, we're going to sell the back end of the market. It's just an interesting. It could be a wrong move initially if they're underestimating what China is capable of doing. I think we're extremely tight globally, and that's not being really reflected because we've got a really strong dollar index right now, and all the carry out that's kind of excessive is in the U.S. right now. But globally, 10.5% stocks to use ex China, and we don't have much room for error. On Safrina Crop has one little hiccup. Or China starts buying the U.S. first because that's the best dollar spent to avoid import tariffs increases. It could get really interesting, and that's what happened in 2020 going into 2021. Is the market was completely incapable of expecting that China would actually do what they did, and we went from low threes up into the sevens. Now, I'm not suggesting that that will be the case again today or this time around, but when you're talking a sub-cost production and a 10.5% stocks use ratio globally, ex-China, I think you got to be a little bit more worried about the risk premium of what can happen at the back end.
Yeah, I think if you took if you had a spreadsheet and you had all the columns of things that have to happen to put a low in, I think we're hitting on a lot of them. Doesn't mean that we have to rally or to your point, have a big bull market. But if you start looking at the risk reward of where government programs kick in, and all those other factors that you talked about, I don't think there's a big victory in trying to be a record short here by any means.
Yeah. Well, it's interesting too. I mean, there's just so much to unwrap. Our friends in Brazil from Bourbon Brown Trade Management, his questions on crude oil, with this new administration, and the rhetoric or the things that Trump has said on Israel and Iran and just his whole positioning on stopping these conflicts. Crude oil breaking, down a couple bucks here today. So it's just, all these factors that are contributing as well. You're shaking your head, Dustin. Thoughts on that? You're muted.
Yeah, the petrodollar, right? So you have crude oil is priced in dollars globally still. And yet, I think the dollar up 2% is something that it has huge shockwaves across all commodity markets. Gold down, $100 and Bitcoin up to new record highs.
Mm-hmm.
Crude oil is still going to be impacted by the almighty dollar right now, but yeah, the threat of additional sanctions on Iran and now maybe the handcuffs are off a little bit for the Biden Harris handcuffs in Israel are off a little bit for what could happen between those two countries. So at what point is the world a little bit worried about Iranian supply coming offline? I agree. There could be a massive implication for crude oil beyond just the rising dollar today after this. So just something to continue to watch. I'm not bullish crude oil by any means, but I just think that there's a huge question mark there now that you have to consider as part of the risk.
Absolutely. Anything else to add here, guys, this morning on the grain side as we come into the open? Ben, a few parting shots?
I think you got to watch today to see how all this money on the sideline wants to get deployed. We see an equity market that's going crazy to the upside. The long equity short grain trade has been a big winner over the last 15 months. And I do think that if they stepped in and tried to short grains again, I think it would be a mistake.
Well, very good. Rylan, we've got a couple minutes here coming into the open. Thoughts on livestock and how this is all going to potentially play out with a new administration?
Yeah, I mean, it seems like we could probably get roped up into some of the currency trades, some of the outside markets. But I mean, overall, a cash market is still going to be king, I think, at this point. So cattle market just kind of choppy yesterday. Saw some mixed action. Beef was mixed. But, I think the risk right now in the meats is really the downside. You got managed money carrying huge long positions. So any real hiccup here or kind of downside action, I think, or any kind of fear, I think if it gets in here, could definitely cause some damage. But overall, I think that's what people want to see. That's what I would imagine that the managed money is pretty pretty much prepared for this kind of price action, just considering their length. So I think they'll probably be on the defensive here today overall. But on the hog side of things, we finally saw some light liquidation. Kind of came off these contract highs a little bit, with pork lower, bellies down $6. Cash hogs, though, on the other hand, were up nearly $6 yesterday. So we'll see how it kind of acts, with the peso being down hard, the dollar up. I mean, overall, it just seems like you could bring a little bit more of a negative sentiment that we've seen in the hogs just from the macro standpoint. But, anybody that was waiting to buy hogs cheaper, here we go. So we'll see. It seems like there could be a little bit of a fight today on the hog side of things.
Very good. Appreciate the update. Just coming into the open here. Pretty quiet, down 3 3/4 in December corn at 415. January soybeans are down 15.5 at 986, and December Chicago wheat down 9 1/4 at 563.5. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So once again, thanks to everybody that tunes in. We are doing this every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Tomorrow morning, we will have export sales out at 7:30 Central. We'll take a look at those, visit about those in the war room. So hope everybody has a great day, and we look forward to talking again tomorrow.
Thanks, Dan.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.